You may have heard people say that most option traders lose money. Well, I've researched the data and it's true. Most retail investors lose money trading. According to a paper published by professors at MIT and Stanford, retail option traders lose somewhere between 5 and 9% per option trade on average. In other words, most retail option traders lose money overall. Having been involved in markets for over 20 years and spending time with institutions, including Morgan Stanley, TD Ameritrade, E-Trade, and multiple hedge funds, I've seen the impact of this firsthand from both the institutional and the retail side. I've taken the time to figure out what the biggest contributing factor to these losses is. Now, there are many reasons you could list for why most retail traders tend to lose money trading options, but it all comes down to one basic thing. I want you to do me a favor and pay attention to this entire video, because the one-word reason I'm going to give you sounds too simplistic to be interesting. But if you really understand what I'm about to share with you, it could change your trading future. The single biggest reason most retail traders lose money is education. Or rather, they lack the proper education and knowledge they need. Now, most retail traders suffer from something known as the Dunning Kruger effect, and it can cause huge losses in a portfolio long term. This term was coined by psychologists David Dunning and Justin Kruger in 1999. And it's a cognitive bias that refers to individuals' tendency to overestimate their knowledge and abilities in a particular domain, while simultaneously underestimating the complexity and challenges involved. In other words, getting a little bit of knowledge is just enough to be dangerous to your pocketbook, and the data proves this. According to research, those with low levels of expertise or competence in a particular domain often lack the necessary skills to recognize their own limitations accurately. This leads them to overestimate their abilities and mistakenly believe that they're more knowledgeable or skilled than they actually are. Conversely, people who possess a higher level of expertise in a domain tend to underestimate their competence. As they recognize the complexity and the nuances involved, they assume that others have a similar level of understanding, leading to a tendency to undervalue their own expertise. The Dunning-Kruger effect can have a major influence on retail traders in several ways, impacting their decision-making, their risk management, their overall performance in financial markets. The first way is something known as the illusion of knowledge. Novice traders may feel overconfident after some initial successful trades. They assume they possess a deep understanding of the market or that they're a better trader than they really are. And this can lead them to neglect conducting proper research. They rely on speculative hunches rather than sound analysis. The second way it can impact traders is through the ignorance of risk. Retail traders experiencing this may underestimate the potential risks involved in their trades. They fail to implement appropriate risk management strategies, and this can lead to significant losses when markets behave in a manner other than what they were expecting. The third is overtrading. Overconfidence can fuel a dangerous tendency to overtrade. Retail traders might engage in excessive buying and selling without proper analysis or consideration of the impact of transaction costs. This can also lead to a reluctance to seek help. Those affected by the Dunning-Kruger effect are less likely to seek advice or learn from experienced traders. They may view their own knowledge as sufficient, dismissing the insights of others. And finally, emotional reactions. When trades don't go as anticipated, traders influenced by the Dunning-Kruger effect may struggle to accept responsibility for their own mistakes. Instead, they may blame external factors and they refuse to adjust their strategies, leading to further losses. Recognizing and mitigating the Dunning-Kruger effect is crucial for retail traders seeking long-term success in financial markets. Benjamin Franklin once said, "An investment in knowledge pays the best interest." Traders need to be continually learning. You have to adopt a growth mindset and embrace this continuous learning. Recognize that there's always room for improvement. This can encourage us to seek knowledge from reputable sources and remain open to new insights. The other thing we can do to help offset this Dunning Kruger effect is by keeping records. Maintaining a trading journal can help you objectively analyze your decisions and your performance. Regular review can shed light on any cognitive biases that you may have, and this can enable you to make data-driven adjustments. And seek feedback. Engaging with more experienced traders or mentors and seeking constructive feedback can be immensely beneficial. Gaining insights from somebody with proven expertise can lead to better decision making. You need to embrace humility. Acknowledge the limitations of your own knowledge. Be humble in the face of uncertainty. This can protect a trader from overconfidence. It can protect you from rash decisions. A lack of proper education presents a significant challenge to all traders, but especially retail traders, when it comes to navigating the complexities of financial markets. By understanding the potential impact of the Dunning Kruger effect, traders can adopt a more informed approach, leading to better decision making and increased success in trading endeavors. Awareness, continuous learning, and a willingness to seek guidance are vital tools in mitigating the negative consequences of limited knowledge and the Dunning Kruger effect. So go ahead, take a step back, look at your trading journal. If you're not keeping a trading journal, start keeping a trading journal. Ask for help. Find somebody who can get you the proper education you need, somebody who has a proven track record to help you out. As always, thanks for watching. Stay safe wherever you are. Have fun. Let's all go make some money.